It has been a crazy week for Ethereum, and ETH holders are definitely being rewarded for it. And in this video, we're going to cover exactly what caused the birth, the London hard fork, and how we are getting closer and closer to the full transition to Ethereum 2.0. But before we start, Alfacash is a great platform where you can buy, sell, and exchange all cryptocurrencies, digital assets, and other blockchain tokens. So be sure to hit the link in the description below and start trading today. Also, this is a brand new channel, and there will be much more content coming out in the future. Now, let's get into it. Okay, so just so you know exactly how much Ethereum popped off in the past month or so, we have to look at the prices. So starting on July 20th, we hit a big dip down to around $1,700. Then it quickly popped back up to the 2000s. But then on the 5th of August, we saw a huge explosion that led us past the $3,000 mark. And at the time of this recording, we're sitting at a price just under $3,200. That is almost a doubling in price in less than 20 days. That's so crazy. And the reason why the date August 5th is so important is because this is the day that implemented the London hard fork, which also included the long-awaited EIP 1559. And the EIP just stands for Ethereum Improvement Proposal. So now it says right here that EIP 1559 is a proposal to make Ethereum transactions more efficient by using a hybrid system of base fees and tips to more evenly incentivize miners in periods of high and low network congestion. And basically what this means is that there's times where a lot of people are trying to make transactions, and when that happens, the price of the fees to make your transaction go through, or the gas fees is what it's called, is super high. And then also times where there's not that many people, obviously the price goes down, so it's pretty low. So basically, depending on the time that you want to make the transaction, the price of the gas fees can be really low or super high. So that just means that there's so much more to worry about when you want to make a transaction, and it's just not convenient for anyone. So what this implementation does is it allows you to just pay a base fee for your gas. And that means that there's not going to be a lot of volatility even when the network is really congested. And for this, the miners will not be paid as much for their work in the consensus. However, if you're looking to get your transactions through much faster, what you can do is you can add a tip to your transactions, which will tip the miners so that they will make your transactions a priority and get it through faster. And the other important part of this update that has a lot of people excited is the effect that it has on the supply of Ether. With this update, the transaction fees will be burned, so that means that the tokens will no longer exist. And that means if the supply of Ether is going down, then the value of those tokens will become more valuable. And I mean, this is simple economics. If the supply goes down and the demand stays the same or goes up, then the price will definitely go up. But the big reason that Ethereum is planning to lower the payment to miners is because they're trying to incentivize the miners to get off of the proof of work system, which they have now, and move over to the proof of stake system, which is what they need in order to transition to Ethereum 2.0. Moving closer to proof of stake in Ethereum 2.0 is very exciting, and is something that the community has been looking forward to for a long time now. However, there are still quite a few steps that Ethereum needs to take in order to get there. One of those being the difficulty bomb, which is kind of the final step to get miners off of proof of work and over to the proof of stake system. Basically, what this is doing is adding a lot of fake miners to the normal proof of work system, so that the people who are still mining right now, the process will become so much harder that it won't even be profitable to mine on it. Therefore, it incentivizes them to move over to proof of stake, because then proof of stake will be a much more profitable system. And this is hopefully going to happen by the end of this year. Something that many people are hoping for is that moving over to proof of stake should help Ethereum separate itself from the coupling of the volatility and the price fluctuations experienced by Bitcoin. And this doesn't mean that Ethereum is not going to experience its own volatility. It for sure will. However, what it's saying is that it's going to separate itself so that it's not affected directly by the volatility of Bitcoin. And this leads us into the biggest question, which is the flippening. And as Ethereum is getting closer to the complete transition to proof of stake, many analysts are saying that they're getting closer to Ethereum overtaking Bitcoin with the largest market cap in the space. This means that Ethereum will then be the number one and the top dog, and will knock down Bitcoin to number two. Now, this is a huge goal to accomplish, and Ethereum still has a lot of hurdles to overcome. But as we are seeing Ethereum slowly fix these problems one by one, we are beginning to get even closer to the flippening actually becoming a reality. Overall, this has been a very exciting month for Ethereum, and it will be even more exciting to see what the rest of the year has to come. Now, if you enjoyed this video, go ahead and hit that like button and subscribe to the channel. And to keep up even more with the crypto space, you can check out our blog at blog.alpha.cash. See you next time.